Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamilton, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
All right, Janine, let's talk about the recent report from the Canadian Real Estate Association. It seems like home sales in Canada are on the rise again, with a 2.8% increase in June compared to May. That's the second consecutive month of growth, which is quite encouraging.
Yes, Steve, it's definitely a positive sign, especially considering the 3.5% increase we saw in May. But it's also important to note that new listings have dropped by 2.9%, which could indicate a tightening of supply conditions. It seems like buyers are eager, but the availability of homes isn't keeping up.
Exactly, Janine. The Greater Toronto Area has led this recovery with a significant 17.3% increase in transactions since April. However, despite that growth, activity remains historically low. It's a bit of a mixed bag, wouldn't you say?
Absolutely, Steve. While it's great to see the numbers going up, it's also crucial to recognize the challenges. The MLS Home Price Index was nearly unchanged, down just 0.2% from May, and we saw a 3.7% year-over-year decrease. It's a reminder that the market is still finding its footing.
That's true, Janine. And with the national sales to new listings ratio increasing to 50.1%, up from 47.3% in May, it suggests we're moving towards a more balanced market. Although, with the looming 35% tariff threat, there's still a lot of uncertainty hanging over the market.
Yes, the economic uncertainty is something we can't ignore. Valérie Paquin, the CREA chair, pointed out that if this uncertainty held back the spring market, we might see delayed activity surface later in the year, provided there aren't any further disruptions.
And with 206,435 properties listed on Canadian MLS systems at the end of June, that's an 11.4% increase year over year. We're just 1% below the long-term average for this time of year. It shows there's still a healthy inventory out there, but the market dynamics could shift quickly.
Right, Steve. We're currently at a national inventory of 4.7 months, which is slightly under the long-term average of 5 months. It's not quite a seller's market, but it's not a buyer's market either. We're in that balanced zone, which could be promising if it holds steady.
Let's shift gears and talk about Canada's housing starts in June. According to the latest data from the Canada Mortgage and Housing Corporation, the pace of new home construction was almost unchanged, with a slight increase of just 0.4% from May. This brings the seasonally adjusted annual rate to 283,734 units, up from 282,705 the previous month.
It's interesting to see that while the overall numbers are stable, there's quite a bit of regional variation. For example, urban centers accounted for the lion's share with 261,705 units, while rural starts were at 22,029. The trend measure, which helps smooth out short-term volatility, also rose by 3.6% to 253,081 units, indicating a modest rebound in building activity.
That's right, Janine. But what's really catching my attention is the performance across different regions. Vancouver experienced a massive 74% jump in housing starts compared to last year, largely driven by multi-unit projects. On the flip side, Toronto saw a significant 40% drop, also due to fewer multi-unit starts. It seems like there's a stark contrast in how these major cities are faring.
Absolutely, Steve. While Vancouver's surge is encouraging, it's important to consider the broader implications. With Toronto experiencing such a decline, it raises questions about the availability of affordable housing and the potential impact on prospective buyers. And Montreal isn't left out either, with an 8% decline in starts.
These regional disparities highlight the complexity of the Canadian housing market. It underscores the need for tailored strategies that address the unique challenges and opportunities in each area. As we move forward, it'll be crucial for policymakers and industry stakeholders to consider these differences when planning for future developments.
Indeed, Steve. It's about finding a balance that supports growth while ensuring that housing remains accessible. The data from the Canada Mortgage and Housing Corporation is a reminder that while the national picture might seem steady, there's a lot happening beneath the surface in individual markets.
Let's turn our attention to the current state of Canada's condominium market. It's quite a predicament for those looking to move up to larger homes. According to a report from the Canada Mortgage and Housing Corporation, condo apartment sales have dropped significantly by 75% in the Greater Toronto Area and 37% in the Vancouver region since 2022.
That's a huge drop, Steve, and it's really affecting those who had hoped to use the sale of their condos as a stepping stone to buying a larger property. The market has seen a rush of new supply, but investor demand has plummeted, leaving many potential home upgraders feeling trapped.
Exactly, Janine. It's a classic case of supply outstripping demand, with record completions of over 25,000 units in Toronto and over 12,000 in Vancouver in 2024 alone. This oversupply has driven down prices, with Toronto condo apartment prices falling by 4.3% year over year as of June 2025, according to the Toronto Regional Real Estate Board.
And that's not the only challenge. Developers in Toronto are struggling with unsold pre-construction units, with 55% still on the market in the first quarter of 2025. It's a far cry from the 70% pre-sale threshold typically needed for securing project financing. This situation is causing developers to rethink their strategies.
The contrast with other housing segments is stark. In Vancouver, while condo sales dropped by 20% in April compared to the previous year, detached home sales only fell by 5.3%. It highlights how different segments of the market can react differently to the same economic conditions.
Victor Tran from Rates.ca pointed out that many condo owners are kind of stuck because they had planned to use the proceeds from selling their condos as down payments on larger homes. It's a tough spot, especially when the market doesn't cooperate with their plans.
Robert Kavchich, a senior economist at the Bank of Montreal, has even gone so far as to say that we're pretty much at a recession in the condo market. It's a sobering thought, especially when the broader housing market is showing signs of optimism.
It's certainly a challenging time for condo owners and developers. With cancellations of projects up 500% in Toronto and 1,000% in Vancouver since 2022, many are facing tough decisions about whether to accept losses or hold out for a recovery.
Economists at TD Bank are forecasting a further 10% drop in condo resale prices in the Greater Toronto Area this year. It's going to be interesting to see how this plays out and whether the condo market can bounce back in the near future.
Definitely, Steve. It's a reminder of how interconnected our housing markets are and how challenging it can be to navigate these waters. For those affected, it's important to stay informed and perhaps seek guidance from professionals to make the best decisions in these uncertain times.
Janine, Oxford Properties Group has just broken ground on a significant rental development in Scarborough, marking the first major purpose-built housing project in the area in over a generation. This $750 million project is quite an undertaking, wouldn't you say?
Absolutely, Steve. It's a monumental step forward for Scarborough, especially considering the critical need for housing in the area. The development will consist of 3 residential towers with a total of 1,285 rental units, and over 20% of these units are earmarked as affordable. This is really going to make a difference for many families.
It's impressive that Oxford has secured a $650 million loan through the Canada Mortgage and Housing Corporation's Apartment Construction Loan Program. This is the largest single loan issued out of Toronto under this program, which speaks volumes about the project's scale and importance.
Yes, and it's a great example of how public-private partnerships can work together to address housing challenges. The project is not just about adding new homes, but also about creating a community with amenities like outdoor lounge areas, co-working spaces, and a children's playroom. There's even a new 22,000 square foot public park planned at the south end of the development.
And let's not forget the project's commitment to sustainability. By using a geothermal heating and cooling system, Oxford aims to reduce energy use by 55% and greenhouse gas emissions by 74%. That's a significant environmental benefit, which aligns with the growing demand for eco-friendly housing solutions.
It's encouraging to see such a forward-thinking approach. The inclusion of a broad unit mix, ranging from studios to three-bedroom apartments and townhomes, demonstrates Oxford's intent to cater to a diverse population. This kind of inclusive planning is essential for fostering a vibrant community.
And with the project's proximity to Scarborough Center TTC station and the future Scarborough subway extension, it's ideally situated for transit-oriented development. This will not only enhance connectivity, but also support the broader vision of transforming Scarborough into an urban hub.
Exactly, Steve. Mayor Olivia Chow emphasized the importance of this project in addressing the housing crisis and highlighted the city's support through the Rental Housing Supply Program. It's a testament to the collaborative efforts needed to tackle such complex issues.
Blake Hutchison, president and CEO of OMERS, also pointed out how this development is a prime example of how investments can serve multiple purposes, from delivering returns for pension members to improving housing options for the community. It's a win-win situation.
It's exciting to think about the potential impact of this development not just on Scarborough, but as a model for future projects across Canada. With construction expected to be completed by summer 2029, there's a lot to look forward to.
Let's talk about the rise of alternative and private lending in Canada's mortgage market. It's no longer just a niche option, but rather a growing choice for many borrowers. This shift is largely due to the affordability challenges and increased conservatism among traditional bank lenders.
That's right, Steve. It's interesting to see how the perception of private lending has evolved. Many people used to think of it as a last resort for borrowers who were struggling financially. But as Riaza Ali from Fisgard Asset Management points out, that's not the case anymore. It's becoming a viable option for people looking to enter or stay in the real estate market.
Exactly, Janine. The Canada Mortgage and Housing Corporation has reported that the growth of alternative mortgage lending has even outpaced national mortgage credit. That's a significant development, with the largest 25 mortgage investment entities seeing a 7.2% increase in assets under management by the end of last year.
And with that growth comes a responsibility for brokers and agents working in this space. Riaza Ali emphasizes that while brokers in Ontario are required to complete a second-level course to transact in private mortgages, it's crucial they go beyond that. They need to truly understand the intricacies of private lending and ensure their clients are well informed about their options.
That's a great point, Janine. Interest rates in the private lending sector are typically higher, so it's important for brokers to help clients see these solutions as temporary. The ultimate goal should be to transition them back to the conventional lending space.
Absolutely. It's about making sure clients have a clear and realistic exit strategy. As Riaza Ali mentions, it's vital that brokers don't leave clients in private lending arrangements for longer than necessary, as that might not be in their best financial interest.
Ontario's financial services regulator is also cracking down on unethical practices by mortgage agents and brokers in the private space. This underscores the importance of transparency and ethical conduct when dealing with clients. Brokers should explore all possible solutions and ensure clients fully understand their options.
It's a reminder of the need for integrity and diligence in the industry. Providing clients with comprehensive information and support is essential, especially in a market that's continually evolving. As Riaza Ali will discuss at the upcoming Canadian Mortgage Summit, there's immense opportunity in this shifting landscape, but it requires careful navigation.
Let's take a look at the current state of Ontario's housing market. According to recent data from the Canadian Real Estate Association, it appears that home prices in Ontario have begun to stabilize after several months of declines. The average price of a single-family home in Ontario fell from $944,400 in June 2024 to $880,700 last month, which is about a 6.7% drop year over year.
That's right, Steve. It's a bit of a relief to see some stabilization, but it's important to recognize the challenges that remain. Condo prices in the province also saw a decline of 8.6% from last year, and townhouses were down 7.8%. These numbers highlight the ongoing adjustments in the market.
Indeed, Janine. While the stabilization is a positive sign, we can't ignore the looming threats, particularly the 35% tariff threat from the United States. Sean Cathcart, a senior economist at the Canadian Real Estate Association, mentioned that while June's data shows some recovery, we're not entirely out of the woods yet. This economic uncertainty could continue to impact the market.
And it's not just about the numbers, Steve. Valerie Paquin, the chair of the Canadian Real Estate Association, noted that while many housing markets turned a corner in June, conditions still vary greatly across the country. If the spring market was held back by economic uncertainty, we might see some of that delayed activity surface later this summer and into the fall, provided there aren't further disruptions.
The regional differences are quite telling. For instance, in the Greater Toronto Area, prices of single-family homes were down 6% year over year in June, while condos fell 7.8% and townhouse prices dipped 7%. Yet, in Northern Ontario, areas like Sault Ste. Marie and Sudbury saw price increases of 4.9% and 7.4% respectively. North Bay saw a slight rise of 0.5%.
It's fascinating to see how different regions are experiencing these changes. It really underscores the need for localized strategies and solutions. Each area has its own unique set of challenges and opportunities, and understanding these dynamics is key to addressing them effectively.
Absolutely, Janine. It's crucial for stakeholders, from policymakers to real estate professionals, to take these regional variations into account when planning for the future. As we navigate these uncertain times, staying informed and adaptable will be essential for everyone involved in the housing market.
That's a great point, Steve. It's all about finding that balance and making informed decisions that can help weather the uncertainties. For our listeners, staying updated with the latest data and insights will be invaluable as they make their housing and investment choices.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.